Imagine doing everything right, paying your rent on time every month for years, no missed payments, no late fees, and then one day you're ready to buy a house. You reach out to a mortgage lender, credit union, only to be rejected, declined. They tell you you don't qualify because of your credit. You can afford to pay your rent, but you can't get a home loan. The exciting thing is in this video, all of that has changed forever, and I'm excited to share with you the latest news that they're just rolling out that's going to have a huge impact on millions of people, you included. My name is Wayne Turner. I've been in the real estate business for 30 years. I've bought, flipped, sold, helped thousands of people buy and sell their house, and I only share that with you so you can have the confidence knowing that what you actually learned from me is from real life experience. There's a reason why I have this gray in my beard. So here's what's happening. Let's take Mike, for example. He's been paying rent for 10 years, pays $1,800 a month, never misses a payment, works full time, but when he goes to buy a house, he's declined. Not because he can't afford it, but because his credit score doesn't tell the full story, his full story. And that's been the system for decades. The good news is that system is changing. Are you ready for this? For the first time, your payments will actually count towards your credit score. And get this, it's not just rent, utility bills, phone bill, water, electric, gas. That means real life payments that you're doing, real life payment history is going to be included in your credit report. I mean, this is the stuff that actually shows how you live your life. But get this, effective immediately, Fannie Mae and Freddie Mac are accepting new modern credit scores that give you the credit you deserve for paying your rent on time. The Federal Housing Finance Agency, FHFA, that's a mouthful, they're over and they oversee Fannie Mae and Freddie Mac, and they announced that effective immediately they're implementing what they call Vantage Score 4.0, and Fannie Mae and Freddie Mac will be using that. But here's where it gets even better, because FHA, the Federal Housing Administration, also is going to be implementing Vantage Score 4.0 and FICO 10T. And what this means is that lenders and more buyers are going to have the ability to purchase houses like they've never realized they could before. So let me ask you this. Do you agree that that's a good thing? Should rent and utility bills be included? I'm curious what you think. If so, give me a like button or please comment. Tap the thumbs up. It lets me know that, hey, you're interacting and you believe that's a good thing. A lot of people out there do. Some people like Mike who've been doing everything right could finally qualify for a house. And they're saying this could help tens of millions of people. Like, think about that. You may be even one of them out there watching. Or maybe you know somebody who wants to buy a house who this will benefit. Please share this video with them. Here's the tricky story. Because Mike doesn't just have one problem, he has two problems. Problem one is the buying decision. Like, is now the right time? Should I buy a house? Number two is home prices. So now imagine this. Mike finally qualifies. He gets approved. He's excited. He's ready to go and buy a house, right? And then he looks at the market. $400,000, $500,000, $600,000 home prices. They left interest rates too low for too long. You've heard me say that. For 14 years, they never went over 5.25%. And suddenly, the question isn't, can I get approved? It's, should I even do this right now? So let me ask you this. If you got approved today, would you buy a house? And be honest with me. Comment yes or no. I'm curious. We all need to know this information. So here's what most people don't realize. This change will do one major thing. It will bring home buyers into the market. And when more people are buying homes, prices don't go down. Everything is fueled by supply and demand. Now, this is where things get really interesting. This doesn't just help Mike, it helps first-time home buyers, it helps renters with no credit history, people with no credit whatsoever, and millions of people who can't buy because of the old system. And that part is a good thing, and here's why. It also changes the entire housing game. They made something very clear. This is only for credit-worthy buyers. Just because they're including this in your credit doesn't mean that you're still going to be able to magically purchase a house. This isn't 2008 all over again. This isn't reckless lending. This is what's being called controlled expansion. But here's the real question nobody's asking. Does easier access to homes actually make homes more affordable? Or does it just make it easier to take on bigger debt in an already expensive market? Because, for example, for Mike, and you may be in the same boat, this could be life changing or it could be a financial trap. If, for example, if he or you don't understand the big picture, you see, this isn't just about qualifying for a house. It's about making the right decision, financial decision that's right for you and your family to buy or not to buy. I can tell you personally, we talk to hundreds of people on a monthly basis, and they come to us and they're ready to buy a house. They say, Wayne, we want to get approved. You go to contactwayne.com, put your information in, we get you approved. People who own a home have a forced savings account. It's called equity. And as you pay down your balance, the value of your home increases over time. That makes you money. They call that equity. But here's where people get confused. There's folks out there that tell you to rent and not buy. There's folks out there tell you to invest your money and keep renting, even though rent keeps going up. Now, you have to understand your mortgage payment is not going to go up. Your principal and interest that you're paying doesn't go up. Your payment may go up over time because the value of your home increases and insurance increases, and you want to make sure that your insurance policy covers your home. Lord forbid something happened to it, fire, flood, tornado, whatever it may be, and you have to rebuild the house. So yes, insurance does go up. A lot of people have seen that over the last 5 or 6 years. So is everything, right? And then you also have taxes. So as the house becomes increased in value, worth more money, then unfortunately we have to pay property tax, and they reassess the property every year, every 2, every 3 years, depending on the city, county, and state. And that makes your payment go up. Personally, I just look at you want to be debt free, because the whole purpose in being debt free is to not have any payments. And the other argument is that we got maintenance costs. Sure, it's expensive to replace a heat and air unit right now. It's about $7,000 to $9,000, depends on where you live in the country and the size of the unit. Same thing with a roof. But I always tell folks, if you're that concerned, just buy a new house. I mean, just buy brand new. Like my first house, I tell folks I moved out a little bit in the rural suburban area where I was literally 25-minute drive from Home Depot or Lowe's. By doing so, I got a great buy on a brand new house, was able to pick out colors and do all that kind of cool stuff. Lived in it for 5 years, sold the house, and I made $25,000 in equity. And that's the big difference. That's what people have to see and know, that it's the long game, because when you buy the house, you're paying it down. Your payment's not going to go up. Your rent's always going to go up. And I'm not trying to sell you on anything. I always say you have to do you. Quick story. James and his wife, they buy a house. 3-bedroom, 2-bath, 1,400 square feet. They own it for 32 years. It's now paid for. All they have to pay is taxes and insurance. That's $7,000 a year, $583 a month. He paid $75,000 for the house 32 years ago. Now it's worth $455,000. He could sell the house and that money's tax-free. But if you look at someone else that has been renting for 32 years, multiple places, they're paying $2,100 a month right now in rent as opposed to $583. That's a big difference. And they don't have anything to show for it. They don't have anything to sell. That's why they say real estate is a wealth builder. So if you want honest breakdowns like this, no hype, no fluff, be sure to tap the subscribe button. It's free, doesn't cost you anything. And please never be afraid to leave comments, ask questions, and share this video with anyone whom you think will benefit from it. I'm a big believer in life, that you learn it, you master it, you teach it, and then you pass it on. Until next time, thank you, and may God bless.